The latest FOMC meeting on the 31st of Jan, Jerome Powell said the Fed is not ready to start cutting. In that sense, the yield immediately pivoted higher. And on Sunday, 4th of Feb, during an interview, he emphasized again the US Central Bank is not ready to cut interest yet. And we saw it send the yield higher again. Today we'll discuss the yield or interest rate direction in the months to come and why the Fed is making such a careful calculation in its decision to cut rates. My name is Con Hao. My work in this channel, as always, is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. And before we get into this subject, please do take some time to read through the disclaimer. Let's study into the relationship between Jerome Powell's statements and the markets. And of course, we're going to discuss why Jerome Powell is making such a careful calculation in his decision to cut rates this time around. And on the 31st of Jan, during the FOMC meeting, the Fed have decided to hold rate for the fourth time. And most market watchers also notice two keys of this meeting. The first key is that the language of continuous rate hike in their statement has been removed. But however, the key number two is that there's no plan for rate cut, where most market watchers expect to have a rate cut in March. But he mentioned maybe not. And on Sunday during the interview, and Jerome Powell said that central bank is not ready to cut interest rates yet again. And he said that we just want to see more evidence that inflation is moving down in a very sustained manner. And our confidence is rising means that they are saying that inflation is under good control, but we just want some more confidence before we take that very important steps of beginning to cut interest rate. And why this time around he's making such a careful calculation. And let's look at this long-term direction of all these yields. We're going to analyze their long-term direction before we study into its direction in the coming months. Between the interest rate and the yield, what are their difference? Interest rate is determined by the central bank, whereas yields are determined by the investors. When it comes to yields, we have different yields of 2, 5, 10, and 30 years. Of course, if you're going to hedge or trade directly, you can always trade the 10 years yield futures is one of the most popular ones. Since we're going to study the long-term direction of the yield and also studying the short-term, and I would like to look at the cash market. And where is the yield heading? Let's look at the long-term. And I've plotted all this line about coming to about 2 years ago. That was during in April 2022, we saw that it broke above this downtrend line. And I was pretty convinced that there is this long-term transition, and we could see that in the 80s to recent years, it was the yield or interest rate was generally moving on a downtrend. But with this broke above, I do believe that at a point in time that there's a transition over the long term that the interest rate is moving towards a long-term uptrend. And how to plot this downtrend line is that there's at least three significant peaks that we're looking at. There's 1, 2, 3, and we plot this downtrend line. The classic downtrend line is important to identify because once it is being broken above, it also means that there's a transition of trend technically. Let's look at what did I mention about a pivot point earlier. When Jerome Powell said that they are not ready for any interest rate cut, we saw that was a pivot point. I'm referring that this interest rate or yield has already transited from a downtrend, long-term downtrend to a long-term uptrend. This pivot point could be a pivot point on a retracement on a continuous uptrend for interest rate. That's what I'm seeing here. And I'm not ruling out that there's no interest rate cut. There could be in months to come, but I believe that to contain the global inflation, not just in US, but all over the world, is going to be a serious effort is never going to be easy, and I do suspect that inflation is still on the rise. Perhaps that the interest rate in the near to far future will continue to move up. And let's look at what happened to the inflation. And why is Fed making such a careful calculation in its decision to cut rates? Now, we have to understand what happened to the CPI. And this data has been collected over 100 years and more. That we could see there were a period of about 2% inflation. CPI, 2%, 2%. And that was a period that the inflation spiked up and retraced and then move up again. And it spiked up, it retraced in the 70s and it moved up again. And what we saw during this period was the COVID years, it spiked up, and this is the retracement. Jerome Powell are very careful with his word, understandably. The reason was because that he's concerned that it could be a period of retracement and it could spike up again. And if we look at it very intimately, a bit nearer, and we could see that the inflation is start turning up again. And with the Red Sea crisis that we all knew about that, there's a disruption to the supply chain. And in our very near memory, because of this disruption of supply chain, because of the COVID, it sent the inflation to the all-time high. But could it be the Red Sea or the Middle East conflicts that's going to send the inflation up again? And we got to watch the number very carefully. Stay tuned for my coming tutorial. Remember to subscribe to my channel. The market are always telling us on their next move. Join us in our weekly case study and discussion. Click on my profile icon to find out more. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks